Hi there. Welcome to this week's Traders Talk. And this week we have another exciting topic. I think for those who have been following, my name is Meng Hon, and I am a trader, an options trader in the stock market. And I have been giving out this show for, I think now for the past three over months, and there has been a lot of topics and there has been a lot of interest, and I find that there are many more people who wants to actually learn trading nowadays as compared to the past, and this is actually the right forum for traders, for people who want to learn how to invest in the stock market, who wants to learn how to trade options in particular. This is the right forum for you because we have a lot of contents which will guide you along your trading path, and you can also communicate with me, or if you like certain topics which to be add, you can also give some comments and give me some recommendations so that I can actually bring out all these topics which can help in your trading journey. Yeah. So for those who is the first time on this show, welcome. And I hope that today's topic would be something of interest, because what I will be covering today is test driving strategies. Yeah. Creating high pop strategies, which is high probability strategies, so that you can actually get more wins in your trades, and to help you actually make more money in the stock market. Yeah, and also to consistently grow your capital. Okay, so great. So for those who can hear me and all, give me a thumbs up so that I can know you guys are well. And then if you want to actually share this to more people so that they can actually also follow, that will also be great, because that will actually help them a lot in their trading journey. And yep, this is what we'll be covering. And before I start, as usual, I would actually want to go through some of the contents in my newsletter, which I issued every Monday. I issue a newsletter to aspiring traders who actually want to learn trading. Yeah, I write a newsletter which basically gives people tips and also guidance in terms of trading the stock market using options, and also some insights about the market. In the past week. I will also be covering, and if I have some views going forward in the next week, how the market is, and what I will do, I will also share this in the newsletter. And this week I actually wrote about a topic which I call inaction versus inaction. So okay, I repeat, I am talking about inaction versus inaction. Okay, so if you listen to it, right, there is actually no difference. Yeah, inaction versus inaction, it is actually the same. Okay, but if you look at the title carefully, I will actually share the screen here. Yeah, so this is actually what I wanted to talk: inaction versus inaction. So in between this word, okay, the first word in inaction is one word, and then the second word inaction is two words. Okay, but basically when you hear it, it's actually the same. The first one, inaction, means that you are doing nothing, you are sleeping. You are doing basically nothing. And the second word, basically, if you split the word into two, okay, it becomes a very powerful thing. That means you are in action. And this example I just shown a soldier, where one is actually sleeping, doing nothing, where the other one is actually fighting for their country, or fighting for their life. Yeah. So really, at the end of the day, what happened is that our life is also the same. Our life is also the same, where we can be in action or inaction. And the topic which I actually want to really cover is that more on our financial life, okay? Because there are a lot of people who knows that they need to plan for their financial future. Yeah, they need to actually plan for their financial future. They need to actually do something. Yeah, but they are not in action. One word, in action, means that they are sleeping. That means they know they need to do something so that they can grow their wealth and all these kind of things, but they don't do anything, so they are sleeping. They are very passive. They are not doing anything. Okay, versus another person who knows that they need to do something, and he may start to invest or trade the stock market or invest in property or doing something. Then basically that person is in action, means that he is actually moving. He's actually moving ahead, planning and doing and executing what he requires to do. And for myself, actually, I was in action, means I was actually sleeping most of my half of my life, knowing what I should do, but I did not do it. I did not really plan ahead. I did not really invest. I did not really trade the stock markets. I did not buy stocks. I did not do anything. Yeah. So I was basically sleeping like the soldier, in action. In action means doing nothing. Okay. And of course, until a certain point where I started to feel, well, I have actually slept too long, and I have actually wasted a lot of time. And at that point, of course, what happened is that 20 years have passed. 20 years of inaction, means doing nothing, have passed, and I have just started my so-called journey into trading, investing, or wealth accumulation. Of course, it is never too late to start, but of course, what has happened is that you have started 20 years late. Okay, so I do not know where you guys are at the moment in terms of your investing or wealth accumulation phase in life, but if you are young now, I would say that you better be like the soldier holding the gun and go into action. Yeah. Now, immediately, find somebody to teach you, or even learn yourself. If you want to spend more time, learn yourself. If not, find somebody to teach you to actually generate income through the, I would say, through the stock market lah. And of course, why the stock market is because that is actually the fastest route, and I would say an easier route lah. The easier route to wealth and financial freedom is actually through the stock market. Yeah. And of course, you can do other things like property investment. You can open up a business, and all this is also possible. But I would say stock market is definitely something which would have a more structured approach, and also a more predictable approach if you actually follow the methods. If you get trained properly, that is actually a very good way for you to achieve wealth accumulation or financial freedom. Yeah. So for myself, I started late, as I said, 20 years late. Yeah. But of course, the time when I actually started to trade and to learn, it did not take a lot of time. It did not take a lot of time. In fact, you can already generate some form of income within 3 months, 6 months. You can already do quite well if you really put a bit more effort on it. Take more guns, or get a proper mentor or coach to actually train you. Yeah. So that was the thing, is that you have to start. Don't continue to sleep. Get into action so that your future is actually more secure. Yeah. So that was what I have actually written in the newsletter, mainly for you guys to actually take action. Don't sleep, because this is actually the best time for you to generate income through the stock market. I think you have also heard a lot of stories and articles that for the past year, the stock market have never seen so many people get into the market. So many people get into the market, and a lot of them are actually succeeding. Of course, there are various ways how they succeed. Some of them, of course, are really trained, yeah, like myself and all. We really train, we really follow a system or a very good approach so that we can actually build long-term wealth in the market. Of course, there are also group of people who actually follow news. And of course, that is not to say that they will fail, but of course, the risk is much higher because you are actually following somebody with some trades or some stock lists or maybe the Reddit channel, you follow them, or maybe you are just following Cathy Woods because you feel that whatever they buy will go up. But of course, there are risks. Not everything they buy will go up, and if you are unlucky, you might get into an accident, and that will actually cause a lot of financial damage. Yeah. So even if you are investing, even if you are trading, trade the safe way because we want long-term consistency here. Yeah. And yep. Markets. Oh, last week was actually quite. I won't say it's actually a bad week. But of course, most of the trading days last week was actually down. The market last week, I think out of 5 days, almost out of 5 days, 4 days were down, and there was actually a huge a big sell off towards second half of Friday. And yesterday again, you saw that the market is also the market was actually up yesterday. The market was actually up 10 points yesterday, but you see a red bar here. Do you see a red bar here? Yeah. Why is the market having a red bar despite market going up 10 points yesterday? And if you notice, when the stock market, the SPX, this is actually SPX, and when the S&P 500 opened yesterday, it actually opened with a gap up. It actually opened with a 34 points up. Yeah, 34 points up. And of course, during the day, it actually lost most of this gap up. And it actually closed only with 10 points up above Friday. So that's why you see that there's actually a red bar here, despite market was actually up last Friday. And if you look at the SPX S&P 500, right? Of course, the tendency in September is that the historical trend always says that the market would actually go down in September. September is going to be a bad month. That is actually what most of the people say based on trends and all this. And of course, with this in mind, it is also a bit jittery for traders who have this at the back, and when they see a whole week red, then everybody panics. Everybody panics, and they might become irrational. They might be irrational in their trades, and they might just do something stupid. Yeah. So of course, you have to be a bit careful for the month. Yeah. You might want to reduce your exposure because of the uncertainty, but by no means it will mean that September is going to have a huge crash. Even if you look at the past trends, right? I think for the past few months, SPX has actually have had a very strong support at this red line here. Which is the 50 EMA. And I have actually counted, it has actually bounced 8 times during this year. It has actually gone down to 50 EMA and go up, go down again, go up, go down again, go up. Yeah, for 8 times, and out of 8 times, some of it has touched it. There's only one time which it has gone below 50 EMA and trying to touch 100 EMA. Yeah, 100 EMA, but it did not touch and it bounced up again. Yeah, but most of the time it went close and it went up again. So again, this month you will see it is trying to go down to 50. Okay, and of course, we hope also that it don't breach 50 and bounce back up. Yeah, so this is something which you need to actually monitor for the next few days. Yeah. And and the next thing is actually on Nasdaq. Nasdaq, of course, if you look at Nasdaq, last week was also a slight retracement, but you can see that it is actually still a bit far from the 50 EMA. And for Nasdaq, I would say the next support level it has would probably be at about about 15145. Yeah, about another 300 points lah. So another 300 points down, there would probably be at the next support at this line here. You can see this line here. So probably the next level would slightly be above the 50 EMA. Historically, NDX can actually go down much more than SPX. Today I saw the futures. The futures Nasdaq was slightly down in rate. Let me just check. Yeah, it's already green now. It's already green now. Before I started the show, it was actually showing Nasdaq was actually a slight red, whereas SPX was actually a small green. Yeah, it is all green now. So of course, if you look at the markets these few weeks, the intraday trades tend to be very choppy. Just like Monday yesterday, it has about 30 over points up, and then at the end, it will actually lose up its gain. So this is actually the same thing might happen in the next days. So I'm also looking at possibility of intraday trades. If basically there are opportunities, you see. Yeah, just on the index, probably on the SPX index, I can probably look for some intraday trades if there are opportunities. Yeah. So Nasdaq, again, what happened in Nasdaq last week was Apple. Yeah, if you have been following Apple, last Friday, Apple had a court case with Epic, which is the game Fortnite. Any gamers out here, if you are a gamer, give me a thumbs up. And Fortnite has actually been booted out of Apple Store. Yeah, Apple Store actually kicked Fortnite. You cannot download Fortnite from Apple Store because there was actually a dispute. And when you tie into Apple the apps, right, you can only pay through the Apple, and Apple of course takes up a charge of up to 30% of the revenue from all these game platform or whatever software they put on Apple. And on last week, the court has actually said that Apple should not prohibit app operators to only use the App Store to pay for its games or downloads or all these kind of things. Yeah. So of course, when that happened, Apple price actually dropped by about $5, about 3% last Friday. And I was hoping it to drop more. I was actually hoping Apple to drop more to about 145, but unfortunately, yesterday Apple price has actually went back slightly up. Yeah, it went back up about another $1, but at the end of the day, I think it was only about 20 or 30 cents up, if not mistaken. So it did not go down any further because I don't think it can actually go down more because even last Friday drop, they have already lost 70 billion of market cap. 70 billion. And of course, I would say that if you are an Apple user, would you want to actually go through the hassle to pay for your apps or so for your downloads with another platform? Yeah, if you are an Apple user, give me a thumbs up if you do not mind to actually pay, or you prefer to pay through the App Store. if you are an Apple user and you buy things, if you prefer to pay through another platform outside the App Store, give me a heart. Yeah, so that I know where you guys are. For me, I don't mind. I mean, I don't mind if you use Apple. I mean, the phone is already so expensive. I don't think you want to stinge some dollars just to save a $1 or $2, and you have to go through another platform, which is you don't know the security and all this about when you actually make payments. So I don't think that the impact would be so much on Apple's revenue going forward with this case, and more people would actually offer alternative payment modes when they offer their apps in App Store. Yeah. So this is more of a market reaction where Apple might be oversold, and hopefully it will actually go up again in another few days. Yeah. So that was one big thing which actually happened last week. And the others, of course, on the China stocks and all, nothing much, is still going up and going down. Yesterday, the first half, it was actually going down, and then in between it went up, and then at the end of the day it was not going anywhere. Yeah. So again, there are a bit more uncertainties still left with the Chinese stocks. And of course, last week, if you have read, Biden and President Xi had a phone call, and again, the press started to put more negative news, talking about them investigating Chinese subsidies and all this into the market. So again, all these are really news that just want to affect a bit of our mental mental as investors or traders. But at the end of the day, whatever you trade, just still look at the price actions in the charts. Yeah, price actions in the charts. That would be a safer way rather than doing something just based on news which you read. And talking about news, there was also news, some fake news going through on this what is that cryptocurrency where was it Walmart which says that they want to accept Litecoin as a paying currency. Yeah. It was all over the press, and then suddenly it was found that the news was a fake news. Again, these kind of things comes, yeah, and of course it affects the market short term. And if you are a trader, you might get sucked into this kind of news which may not be correct. Yeah. Okay, and going to the topic today, I actually want to talk about test driving strategies, creating high pop to consistently grow your capital. And really, as traders, when we actually do trades, we actually want to know whether our trade is going to have a high probability of win or not. Okay, especially if you are an option trader, which basically generate a big part of your income through selling premiums. Selling premiums means collecting money, and if you look at trading portfolios, personally, I would have split so-called my portfolio into two parts. One is actually an income portfolio, and then the other one I deem it as a short-term trading, and I'll actually explain the difference. An income portfolio is actually a portfolio where I generate income on a consistent basis. That means it's like if you put your money in the bank, you know that at the end of the year you would generate a 2% return. Correct? Yeah, agree? Yeah. So that is actually something which you put in, you know what is actually the expected outcome. Yeah. So the same in trading, the same in my portfolio. I would have a portfolio which I say, okay, I put in a capital of say X amount, And at the end of every month, I would want to generate a certain kind of return, a very fixed return, very fixed return. Okay, so this is what I call my income portfolio. And in this income portfolio, I would have a pool of what I call income stocks. Okay, stocks that consistently generate a certain percentage of income for me monthly. Okay, and again, these type of stocks, the strategies which I trade to generate this so-called income or fixed income, more or less fixed, yeah, can be directional or non-directional. Okay, directional means that I would have a bias against whether the stock is going up or whether the stock is actually going down. That is actually what we call directional trades. Yeah, and of course, the other one is actually non-directional. Non-directional would mean that whether the stock goes up or whether the stock goes down, I would also profit in my trade. Yeah, so that is actually a non-directional, or what we call a neutral trade. Yeah, and as I said, the objective of this income portfolio is to actually generate recurring income. Okay, and this is very important for traders who actually trade as a business. As a business means that you take trading as a business. That means it's actually a so-called business to you. Like, you're not just taking trading as a part-time thing where you earn this month, next month you don't do a trade, the following month you hear some news and you trade. Yeah, so if you are a trader and you want to actually build a trading business, so this is actually what I do as a trader having a trading business. And of course, the returns for a fixed income, I would say, would range from between 2% to 5%. It's not a lot. It's not a lot, and I will also explain why. When you actually do this, it won't be, the returns won't be a lot lah, because at the end of the day, it's also dependent on the time you spend on this income portfolio. And also, because you want it to be assured, one thing is that you want high probability of win. Of course, when you trade, and you know that in order for you to actually get a very high probability of win, of course you have to give up something. And the something which we give up here is the returns. So we get a very small return, but we have over 90% winning chance over 90, if not 100, if not 100. Yeah. So this is actually what on the income side. And of course, the second one is actually short-term trading. And short-term trading is basically trading opportunities where we find in a particular stock. Okay, and of course, all traders would have a portfolio of stocks in their watch list, where they I would say they eat and sleep lah. They eat and sleep. What not say watching this every day lah. Yeah, they probably are a bit more familiar with these stocks. For example, Facebook. Yeah, for example, Facebook is always on my watch list. And of course, when there is actually an opportunity to trade, then I would actually trade it for a short-term trade. And if you have followed my traders talk, I think about 2 weeks ago, not last week, the week before, I also explained about my trade on Facebook and when the opportunity came to actually enter a trade and exit the trade with well over 100% of profits. Yeah. So that is actually the short-term trading part which traders would have. And of course, these trades would actually range from 14 days to over about 2 to 3 months. Yeah, you can actually take the position between 14 to 2 to 3 months. Yeah, and of course, when we trade options, a lot of time it can extend to more than 2 weeks. As compared to stock trade, you might exit in shorter term, within 1 day, 2 day, or even a week, you might exit if you are doing pure stock trading. Whereas for options, we actually have strategies which can build up the so-called trade to actually a longer period. Also give time for the trade to mature, yeah. Certain strategies we would actually give them time to mature, but of course, when giving them time to mature does not mean that we do not make any money. We would also put in some trading legs into that so-called directional trade to actually earn some income while waiting for the stock price to go to your target price. And of course, when we are doing short-term trading, the expected returns would be no less than 30% and well over 100% of the buying power. Yeah. And of course, you would think how to actually do this, and I would actually want to cover more today on the income side, how you can actually increase your POP, which is the probability of profit. Okay, very good example is when you actually buy a car. Before you actually buy a car, you would actually want to test drive your car, right? You would not want to buy a car without test driving it, okay? And for guys, you would want to test drive it, yeah? And then some of us even do not have intention to buy cars, and yet we go and test drive it because we just like cars, and you just want to have the feel so that it can actually supercharge your emotion, so that you actually work harder to buy that car. Maybe put more effort in your job, or to get a promotion, or actually learn more trading stocks. Yeah. So again, same thing when you are actually entering into a trade. We would actually want to test out our strategies. And what we do here is actually what we call backtesting. And what does this backtesting does is actually helps you check your strategy, your trade strategy, whether it has actually worked in the past, on that particular stock. So we actually do a back testing, assuming that you have actually applied this strategy over maybe 5 years or 10 years. Yeah. What is actually your probability of win using this strategy? Yeah. So this is actually back testing. And of course, how it helps is it varies. Sometimes it can actually help you to see whether your strategy works on this stock, because different stock performs differently with the same strategy. Different stock perform differently with the same strategy. It's just like your children lah. I mean, you have two kids, right? Both come out from your wife's stomach, right? But one behave differently from the other. Yeah, both are actually from with the same genes, but they behave differently. Yeah, so that is actually a very bad example. Yeah, so but I know you know what I actually want to say, right? Okay, so I have actually started to also use these back testing tools from one trading platform, which I will actually share with you today. How you can actually use this back testing tool from one of the brokers platform, which they actually just introduced. Just let me share the screen. Where is this? Okay. Okay, do you see this? Okay, let me just put it to, let me put this. Okay, this is actually a back testing tool from let me just put this up. Okay, this is actually a tool from this website called Testdrive. Testdrive. Yeah, I will put on the link here later. If you want to actually go and see this, you can actually go to the site to actually see how you can get this back testing tool. Okay, so when you actually enter this platform, you need to register in Testdrive as their sign up, register for an account. Just it's not a broker account, but just sign up under their platform. And then after that, you just go to this site and register as a beta tester for the back to get this back testing tool, because not everybody can access this. Only subscribers to the tastytrade.com can actually get this back testing tool. Yeah, so now I am actually a beta tester testing this back testing tool for them. Okay, what you can actually do here is very simple. Okay, if you look at this, let me, I put up a bigger screen here. Okay, if you look at this back testing tool, right, what happened is that there is actually an options chain here where you can actually type whatever stocks you want. Yeah, let's say, for example, Facebook. And say is okay, so say Facebook. This is actually the same options chain where you will actually see from this your broker platform. Yeah, and of course these are all the expiry. For example, I want to actually enter into a trade for Facebook, say for example 44 days here. Okay, October 29. I want to actually do I want to sell a put, for example. I want to sell a put, and I look for a put. For example, here I want to actually do a 30 delta put. The 30 delta is delta. 30 delta put, I actually sell it here for $7.30. $7.30. Then I go to a back test. Here is -1 contract put, 30 delta. You get the closest. Here is only 29, 44 DTE. Then I actually run the back test. Okay, what this result shows is that for you to sell a 30 delta put on Facebook, okay, you would have a 90% win rate. 90% win rate. And over the years, all the way back to 2012, if you have actually started to trade a 30 delta sell put on Facebook, you would have actually done 221 trades. 221 trades. And your average profit per trade will come to $166. Okay, and then average trade per day is $4 $4 a day. That means you will generate $4 a day Okay, this back test tells you the results. And of course, over, I don't know, 212 to 221 over a period of nine years, you would have actually made a profit of about $36,000 if you actually apply this strategy for 9 years. So this is what it says here, and of course we did a 30 delta put, right? Okay, so that is actually one thing which we actually tested on Facebook, and I want to actually test again another one. Okay, assuming I am not that gung-ho 30 delta is actually something a bit risky for me. I would actually want to do 20 delta. Let's say again the same one. 20 delta would be somewhere here, 340. I sell a put, and then after that I run the back test. Yeah, 20 delta, run the back test. Okay, again, win rate 93%. Win rate 93%. And then average profit a day is 225. Okay, so from the two results which you saw, right? From the two results which you saw, what do you find here? Let me put it again here. Okay, there's actually two results here. One is the Facebook, right? Facebook backtest 30 chain 45 delta 30 delta 30 here. Okay, you run two. One was actually 90% probability, yeah, and this is actually 30 delta, and the other one 93% probability. Okay, so to move from delta 30 to delta 20, your probability of win increased by 3%. 3%. Okay, so that is actually good for you, yeah. But of course, what do you give up? What do you give up? Yeah, you give up from an average profit of just now of $4 a day, and 35,000 here. You actually move to 225 and 20,000. So more or less to actually get improve your probability, you by 3%, you would have actually given up almost 50% of the profits, 50% of the profits. Yeah. So of course, then you need to actually evaluate yourself whether it actually makes sense for you to actually sell a 20 delta put or a 30 delta put on this stock. Yeah. And that is basically how at the end of the day we use this kind of analysis to actually make decisions. Of course, there are also periods where the stock might be a bit volatile when, say, the market crash and all these kind of things. Then of course the back testing thing would not give you that kind of results, because when the market crash like cats and dogs, no strategy will be foolproof. No strategy will be foolproof. Yeah. So again, on average, we can actually see a trend of different kind of way the stock behave with different type of strategy. And of course, you can also do a different type of trades here. Not only selling puts, you can actually do other things, like, for example, if you actually want to do a long-term options on Facebook, for example, you actually want to do this. You actually want to do a back test on Facebook. You want to buy a one call, so I put here buy one call, contract buy a call, delta put it at 50, put it at 50, and you want to actually do a long-term one, which is say 365 days. Yeah. So again, buying a long-term call option on Facebook, and you run the back test. Okay. And of course, when you run the back test, you will actually get the results again. You get the results again. Your win rate for Facebook doing a long-term option is 78%. Of course, you would also need to figure out why this 78%, because Facebook has been going up all the while. Yeah. So again, the type of stocks, don't get misled by this type of results. You also need to go back to look at your charts and see the long-term patterns and long-term trend of the stock to actually analyze what results you're actually getting. So for example, here you are getting a 78%, and assuming you feel that, well, Facebook has been good for the past 9 years, and for the following 9 years it will also perform the same as what it has in the past. Yeah, that means the trend will continue to go up. Then of course these results would give you a gauge that, okay, that you will still get this kind of results if the trend continues. And of course, you can even move this to even one level further of your back testing by actually putting in parameters to say, for example, because you're doing long term, you would not want to actually hold till expiry, because that will actually the decay of your call would actually become very fast. You actually want to do a exit. That means you want to renew your long-term call about 3 months before it expire. For example, 3 months before it expire, you want to exit the trade, then you actually put in here exit at 120 days, and you run the back test again. Okay, and then you see that again, what was your result? 83%. That means your win rate became higher. And then the profits was about average profit per trade is about $1,500 here. $1,500 here. Yeah, and before that. Before that was $2,200. Before that was $2,200. So by actually putting in what is that? A sell, that means exit. You would actually earn less, but increase your probability to a higher value. Yeah. So this you can actually do with multiple strategies, different legs. You can even do other strategies. For example, let's say on Facebook, you want to actually see if Facebook works well with a strategy, say for example, Iron Condor, for example. Maybe you do 20 delta, 1 standard deviation Iron Condor, say this, and then nope. Say you want to do here $5 width. Here, say here, yeah. And you run the backtest. Well, for this, your win rate is 59%. Average premium is 62. Average trade per day is actually 13. Yeah. So this you can do various type of strategies before you actually do a trade to see how it works, how this stock behave according to different strategies, different type of delta. Yeah. Okay. Yeah. So for those who actually want to download this, you need to actually go to tastytrade.com, register as a subscriber of their network, and of course, if you have been trading, there is actually many resources in Tasty Trade related to options trading. Many resources. You can also go there to actually learn how to trade, and to get this beta, become a beta tester. Then you actually look for this. After you registered, then you actually sign up as a beta tester at this platform. Yeah, of course, there are other platforms which also have back testing, but I would say you need to actually key in many parameters to it, and I find that this one which they just introduced works quite well, just to actually get a feel of doing trades with different strategies. Yeah, different strategies. And of course, one of the things which I do a lot is actually on the income stocks. That means generating income by selling puts. So this is one strategy which I actually apply a lot in my trades. And of course, the backtesting data actually give me very good feel of selling puts at different delta levels. That means whether you are doing 30 on this stock is okay, or sorry, whether you are doing 20, you're doing 20 means you earn less premium. And if you want to actually earn more premium by moving it to a higher delta, what is the chances, or what is the probability, and how has the stock behaved before this by with a higher delta trade? Yeah, so that actually comes in a bit handy for me when I'm actually doing this strategy alone. And yeah, I would basically generate more returns. That's why not 2%. It can actually move up to 4 or 5% a month if you are just moving from delta 20 to delta 50. Yeah. And of course, there are also people who sell at delta 40, yeah, to get more. Yeah, but of course, I don't do that, because that would actually cause a lot of trade management, and the trade might get in the money, and then you have a lot of work to do lah. So I'm a bit lazy trader, and I would just want to be safe in my trade and just make sure that income portfolio of mine gets a targeted return of 2%. Or if you can actually do higher, then that would be great. Yeah. So yep, backtesting tool works great. You guys, if you have not tried it, go ahead, try it, test it out. I hope that it can help you in setting up your trades. Yeah. So again, test drive your strategies. Yeah, so that it can actually give you a higher pop and to consistently grow your capital. Yep. So again, some of the things which I train, like on the income side, yeah. So I train a lot of people to actually generate on the income part, using what I call the income generation secrets framework, Yeah. So this is actually what I train people right now, where they actually want to generate a consistent income monthly. So this is the training which I do, and this Sunday I will have a webinar which actually basically teaches you how to actually utilize this kind of strategy and make yourself an income portfolio. Yeah. So that's all for me today, and I hope you actually get some value out of this training. And again, do follow me on Facebook. Do share this with friends who are actually also into trading, or who actually want to get into trading, so that they don't sleep like the soldier earlier in front. They don't have this inaction attitude and go into action. Into action. Yeah. So that's all from me. Signing off, Meng Hon. So do remember to train, trade, and thrive. Yeah. So I'll catch you next week. See you. Bye bye.